Wake up, people, right now. Today, February 2026, silver is trading in two totally different prices. In New York on Comex, around say 85 to 90 an ounce, just paper numbers on screen, easy to push around. But in Shanghai, where real silver is traded, the bars you can actually hold in your hands is hitting 110 to 130 or even higher at times. So that's 30 to 40% gap. Same metal, two different prices, one rigged low, one screaming higher. This is not normal, guys. This does not happen regularly. This is the crack in the system. This is what I mean when I say the system is fucking broken. The markets are broken. The price discovery is broken. You cannot have a price 40% higher, 30% higher in another part of the world where it is traded, it is so liquid, is absolutely mind boggling, where the premiums on physical silver are 30 to 40% higher than the paper silver in New York on Comex. So this is again the crack in the system. Why East is winning the silver war, how West is getting absolutely drained, and why this could explode really soon. It is bigger than you think. Let's get the facts straight. As of right now, in early Feb 2026, Comex Silver's futures, the official global price, are bouncing around 85 to 90 an ounce after some absolutely crazy swings last week. Just a week ago, not even a week ago, 3 days ago, we saw a crash, freaking 30% in a day. Over in Shanghai physical markets, the spot prices were way higher. Again, between 110 to 130, saying only, say, less than 5% of decline. Then why is there is a huge difference? Comex is mostly paper silver, future contracts, bets, derivatives. Traders can sell short massive amounts without owning the actual metal. It's like printing money to keep the prices down. Shanghai, that's real bars moving to factories, solar panels, electronics, batteries, you name it. China and India, they need the actual stuff now. No paper games. Silver demand's insane, and they are paying up. Here is where it gets really shady, guys. Big banks on Wall Street have been accused for years manipulating silver with naked shorts. What is a naked short? It's selling contracts when they don't have the actual metal, flooding the market to crash the price. Why? To protect the dollar, keep the mining cheap, keep profits from swinging. We have seen fines, lawsuits, but it keeps happening. Now look at 2026. China restricted silver exports starting January 1st. They treat it like a strategic resource, rare earth style, no more easy outflows. Meanwhile, Chinese buyers and funds are hoarding physical. Their ETFs and retail rush pushed the premium sky high. When Comex tried to smash the prices down in late Jan, boom, 30% drop in a day. Shanghai premium exploded to 30 to even 45% for a couple of hours with VAT. This is not arbitrage, guys. This is a signal. The paper price is fake, is manipulated, and the real metal is getting sucked east. Western vaults are being drained to feed China's demand. And I'm not even talking India because I made a video on India's demand alone, which is totally separate. Right now, I just want to talk about physical market in China versus paper market in New York. And New York is getting drained because they cannot deliver. So the split, guys, it cannot go on forever. History shows big premium leads to squeezes. Think Hunt Brothers in the 80s. Prices spike hard when physical got tight. Now it's happening again, but it's happening at a global level. Imagine Hunt Brothers, these were just two guys trying to corner the silver market. Right now, you have two huge countries with the combined population of over 2.5, touching 3 billion. They are trying to corner the silver market. Imagine the price explosion that can happen. China's industrial use is exploding. Solars, EVs, 5G, green tech, they need billions of ounces. Supply cannot keep up. Comex delivery notices are spiking. People are demanding real metal, not cash settlements. If 2 minutes stands for delivery, boom, defaults, forced liquidation, price moonshot. The banks are shorting. Why? They're getting squeezed. Higher margins, liquidations, panic. When the paper illusion breaks, guys, the price has to catch up to reality fast and ugly. So what does it really mean? Silver is not cheap at $90 anymore, or even 100, or even 120. That's the manipulated number. The true value, the physical one, is way higher. Stackers in the West are waking up. Reddit forums, dealers, everyone is talking about the 40% premium in Shanghai. Physical coins and bars, premiums are there too. Hard to find. There are lines for hours. Try finding a monster box in Canada. Good luck. Nothing, because I tried. My friends, they're trying to get in now. They're trying, and they can find, you know what? Nothing, because nothing is available. And China is weaponizing silver. Export controls mean less global supply. Why? Because they're the biggest producers of silver. The East is stockpiling, where the West is pretending everything is fine. What is this? This is silver squeeze in slow motion. We have seen flash crashes, but then the rebound is violent. If physical wins, and it will, take my word for it, the paper prices, they get dragged up hard. Could see 150, 200 or more in a breakout in matter of days, if not hours. Bottom line, ignore the Comex headline price at your own risk. Watch Shanghai. Watch delivery demands. Watch world levels. In other words, follow me, because I'm going to keep you up to date. If you're stacking silver, coins, bars, whatever, you keep going. This gap is your warning siren. So which side are you on? The paper illusion or the real metal? So drop a comment and let's have a discussion. Are you buying dips or waiting for the moonshot? Hit that like, subscribe, turn on the notification. We're tracking this live. So now, next, I want to talk about, in my next episode, how gold fits into this mess and why the dollar might hate what's coming next. So stay sharp out there. The metal wars are heating up, and I want us to be one step ahead of this absolute mess that we are in right now. All right, guys, I'll talk to you soon.